Good morning, everyone, and welcome to the European crossover webinar. And just bear with me, I was updating some information on the economic calendar. Pretty steady morning as we lead into the big day here with FOMC. So let me pull this out with you for a moment. There we go. So you can see, despite this being rather big day, we've had quite a bit of data already, and I was just kind of posting that in here or just updating that this Reuters calendar for I don't know what reason, but never does save. So I'm always having to jump back in here and save all this stuff. It gets frustrating, but anyway, it was so we have that we did see we just saw German unemployment rate come in right at 5%. Right in line. We have had earlier German retail sales, UK nationwide housing, Spanish GDP. We do have at the top of the hour, coming back up here, obviously Italian CPI. We do have Eurozone GDP coming up at the top of the hour. Coming in as we roll into the day a little bit further, also Italian GDP a little bit later on, about a couple hours later. From now. But we do have ADP, like I said, to think about it, plethora of data, which is going to be probably a relatively quiet day until we get to FOMC. Yeah, quite a bit of data here. Employment wages. We also have Canadian GDP, producer price indexes. Holy smokes. Shy PMI, you can see right here. AIG, well, that's going to be later after today. Obviously, we don't have right here the Fed information. We can actually pull that up. Let's see. Of course, I didn't pull up the right one. I don't even use this option, so hang on. Anytime before tomorrow would be kind of nice. Okay, here we go. FOMC, obviously it's not even listing the time. Starts this 2-day, which was on 31st. Obviously, here we go. FOMC announcement decision. Let's jump back into economic events. So, but as I said at the top of not top of the hour, at 2 p.m. Eastern, we'll have the Fed rate announcement, and then of course at we'll also half an hour later we're going to have the presser, and we're going to go and get into that and what we're looking at. Not so much what we're looking at because who knows what it's going to be, but how to basically what I think is what I'm going to be looking at. And I'll let the market, like I said, I mentioned with Dale, let the market do the heavy work. This is one report, ADP, they're expecting 150K. I'll let the market figure out what it wants to go in and do instead of, and I think this is the one report that you don't want to, I like to scalp a lot, but this is one report, really don't want to go in and necessarily jump into things. I think, and we'll get to that. Well, let me just go on and move into where we're at right now. You can see the dollar index is hanging right in here. Go and pull this further back out. You see this area coming in right there? That comes in right there, 97. Actually, it's 98.72. I mentioned a couple times 98.71, Mox Nix 1 point. But that being said, this is where I think that we can go to. Now, here's my take on that, but we haven't, gone to the, looking at the bias chart yet. The market's thinking that we're going to get 25 basis points. I don't think anyone thinks we're going to get 50. And I was talking to Bierschman in the chat in the Asian session, and we were talking. We had mentioned about that. I think Waffle also was made a comment about that. But anyway, my thought is that if they get the 25 basis point, we're going to see, you can see how well the dollar's held up, and it's held up and maintained its bid. The market's looking for 25 basis point. If we get the 25 basis point, I think we're going to see a knee-jerk reaction that'll, take us above these highs, which, as I said to him, isn't even saying much. I mean, look where we're at right now, 98.06. The highs are 98.37. That's only 31 ticks away. So I think we'll challenge that. We'll take out those stops, and that'll take us on a path to this 98.71, i.e. 98.7. We'll call it 98.72. My thought is the key is going to be what we do from there, and I think what's going to drive that is going to be the Fed's language, and obviously in the presser, how much weight they keep, and I think it'd be legitimate for them to say, which is the global impact. So I think that if the Fed just basically, after cutting, you can have to give a reason why you cut. Obviously, this lack of inflation, so forth, concerns about global economy. But if you just give bare lip service, which I don't think may be the case, but if they just say, well, the economy's doing fine, but there's some concerns about global growth, some slowdown, obviously concerns with the China and the trade dispute, and then that's pretty much it. Then I think that the dollar will maintain its gains and would move on. My thought being is that where I think they're going to move to is on a very, very short-term basis, then it's going to be 99.18. But we can see right in here, good little level coming at 99.69. Blake has made the point too that we'll probably make a run to par. But my thoughts will be the key one is going to be 98.72. And then if we start to move beyond that, then on the way to par, they'll take a pit stop, I think around 99.18. If we do see the language, we see more and more focus, and I think it would be legitimate in the sense that you're seeing a continued slowdown. They place more and more focus about the slowdown that we're seeing globally, which would certainly go and impact the U.S. But if you look at the data, you're thinking, to a certain extent, we've had slower data. We know that. But to say, well, you know what, everything still looking okay, employment's still doing good. So if they just give lip service, we can go and move higher and maintain that. But I think that if they stress more about the impact, which I think will be legitimate at this point, maybe not necessarily, let's say, 4 or 5 months ago, but now as we continue to see slower and slower markets, obviously the concern with Brexit too, I'm sure that's going to be a question. If they focus a lot more on that or pay a more greater amount of attention towards that, I think that can set the dollar on a disappointment. Doesn't mean the wheels will come off the caboose, but I think what would happen is that the market will feel like it needs to price in additional rate cuts, because I think it'll be like one leads to another. So will the economy, global economy continue to slow down? Yes. So that will get us to the following rate cut. And the more you focus on that, well, as they say, it always gets darkest before the dawn. So if we don't get a deal with China, and I don't think we're going to get a deal with China, they've been singing that song for some time about a deal's going to get done, the deal's going to get done, and nothing's been happening. So if they don't, then would you see it continue to even go even slower as we get into the fall, let's say into the latter part of October? Yeah, so that opens the door for, once again, the 75 basis point, and how much slower things could get. So once again, at these levels, then I think we could see a dollar disappointment if they focus that. So I think that's what we have to be in tune to. It's not so much, well, obviously 98.72 is where they can go to. I don't think it's going to be that hard to trip the stops in 98.37. If you wanted to pounce on something, if it comes up with 25 basis point, I think that you will see them buy dollars and head for that 98.37 and trip those stops. And when we trip those stops, it's going to send us running, probably up into the 98.50s, 98.60s. And then it's 98.72. I think the market may overshoot it a bit, but the market will kind of decide what are we going to do. And then once we get into the presser or we see the text, and then we see the presser, then we can start to see what happens. And but once again, like I said, if they don't, which you kind of doubt, but if they don't, then the dollar can continue its upward ascent. That being said, let's go and move into the news. That's my 2 cents on that deal. Morning bid, Eurozone data seems building the case for the ECB easing. Once again, here we are. Every reason why the euro is going to get kicked downstairs. Annual inflation to July in the Eurozone due out this morning is falling to 1.1% from 1.3% previously. He may even note that, but well, not so much concerned about the Eurozone inflation rate, but obviously the impacts that we're just seeing, the lack of growth. An outcome that would give the ECB more room to add stimulus, the more so if GDP growth, which comes out at the same time, also falls as expected. After yesterday's lackluster readouts on the German and French economy, and with wide expectations of a U.S. Federal Reserve easing later today, the case for Mario Draghi to act by December is becoming insuperable. UK PM Johnson faces perhaps the trickiest leg of his tour on the British Isles today when he meets leaders of Northern Ireland's main political parties. He'll call for a restoration of their power-sharing government, but there are already questions over whether he can act as an honest broker when his government relies for its majority in parliament on the DUP, with whose leaders he dined last night. Be no surprise if Johnson today expresses his distaste even more vehemently for the Irish backstop in the EU withdrawal agreement. One of DUP's blood red lines is that it must go. As both Brexit headlines go, the most significant of the day so far is the news that investment in Britain's car sector fell by more than 70% in the first half of the year due to concerns about a hard Brexit. And on to the markets. Trump's trade war and Brexit have been two of the biggest drags on the world markets for the past couple of years and continue to rein in assets otherwise buoyed by the promise of central bank easing. Just as markets await what is now assured to be a quarter-point Federal Reserve rate later on Wednesday, President Trump darkened the mood of the reconvened U.S.-China trade talks in Shanghai by saying the Chinese just don't come through on agreements, and then added when Beijing still has not bought the U.S. agricultural produce as promised. Man, Trump keeps falling for it like a sucker at a carnival every time. With this, they're going to buy more stuff. I mean, he puts it out there with his tweets saying that they're going to buy more, and they don't do it. Basically just thumbing their nose at him. Trump then warned Beijing against trying to stall talks after next year's election, saying that if they did then there may be no deal or a harsher one if he's reelected. Okay, if you say so. And no deal is the phrase of the moment in the Brexit impasse, with UK PM Johnson still insisting he will take Britain out of the European Union on October 31st unless the EU makes changes to the already agreed withdrawal deal that Brussels says it refuses to alter. Johnson visits Northern Ireland on Wednesday with his pledge to ditch the Irish border backstop. Starting steady to just above 28-month lows against the dollar for the first thing Wednesday after a torrid start to the week. Combination of the two trade tremors shook global equity markets yet again on Tuesday, with Wall Street stocks sitting in the red overnight, despite the looming Fed rate cut, and Europe's Stoxx 600 recording its worst day since May with a 1.5% sell-off. With the Fed awaiting especially the steer on future policy moves after today's quarter point, 10-year Treasury yields held steady about 2.05%. The Europe flash July inflation numbers and Q2 GDP. Eurozone will be released later. And let's go and move into the currency. The dollar held firm on Wednesday as the wait-and-see move prevailed, with traders looking ahead to the outcome of the Federal Reserve's meeting later in the day. The Fed will likely try and dash the prospect of a future rate cut held by the markets. This is going to be the key thing here, and I don't really agree with what this person said right here. The Fed will likely try and not dash the prospect of a future rate cut by the market. And once again, I think this is going to be the key. This is going to be the one key thing that's going to, it's not going to be that I think the dollar's going to, sell off. It's just that this will be the key, the future outlook and how they phrase that, or, trying to think of the right phrase, but how they position themselves in this. And once again, if there's greater focus, and really there would be nothing wrong with that greater focus, about the impact of global growth, then it's going to open the door for future rate cuts. I don't think the dollar's going to turn and sell out big time, but I think it could pare back, especially if we see that 25 basis point cut. We hit those stops. Now, what the key thing is going to be, if that, is we hit those stops above 95.37, which I think we can get to on that knee-jerk reaction. And we do that, then we hit those stops. You might even have some buyers, and then we're kind of lingering there, kind of hanging around at 95.72. And then all of a sudden he keeps on mentioning about the slowdown globally and the impact of that and how it could really, could slow down then you're going to see that dollar index slow down, back off on disappointment. And longs that may have got stopped in are going to get concerned if we do drop back below 97. So that's my 2 cents again on that. But at the same time, Powell is certainly not in a position to promise any upcoming cut. So he's expected to keep his wording vague as possible. And that's going to be the key. I'm not so sure he's going to keep it as vague, said Yukio Ishizuki. Any vague policy references would provide the dollar with an extra lift. That's what I'm saying. It would temper further excessive easing hopes. Once again, like I said, that is a key that we all need to focus on. The greenback was flat at 108.57 yen, and the euro was a little change at 11.54. It's natural for the BOJ to preserve its remaining ammunition when currencies, the most important factor impacting its policy, are stable, said Daisuke Katakama. But if the Fed and the ECB both cut rates in September, it might become difficult for the BOJ to weather the situation by merely tweaking its policy language. The pound, which has tumbled this week, has investors rushed to factor in the possibility of Britain leaving the European Union without a deal. Sterling was a shade firmer at 21.53. Troubles for the currency, which has lost 4.3% in July, were still seen to be far from over as Britain's new PM Johnson took over with the explicit agenda of pulling the country out of the EU. Australian data managed to crawl back from a 6-week low and edged up after data showed that the domestic second quarter CPI rose slightly faster than expected. New Zealand dollar, in contrast, fell after a survey showed that the country's business mood fell to an 11-month low in July. And let me get the bias chart. So let's go move on with the Eurodollar right now. Well, we know about the importance of this 1185. If we get past that, this quote unquote disappointment, here's this 1208, which I think we could take a pause there, but to me, it would be 1224. So as we try and figure out what would be the, I'm going to say the extremes, but let's look at, it'd be 1185. 1224. I think we could hit those stops on the disappointment 1185, and boy, we will sing right through that. And then once again, like I said, not trying to jump ahead of ourselves, we're just trying to go in and we're just trying to gauge what could happen. Like I said, the thing is, no one knows how this is going to go on and play out. I mean, someone's telling you, oh, this is exactly how. They're nuts, because we just don't know. But the focus, as I'm trying to, stress, is going to be. And they just mentioned it now. I don't read these ahead of time. I don't. But I'm just saying is the gentleman was even saying the same thing. The focus, he's saying, well, we think that Powell's going to be vague. But if he's not vague, then really that's going to open the door. If he stays vague, that'll allow the dollar to move higher. My thought would be he doesn't even have to be vague. I mean, it's just going to be how much and I don't want to call it lip service, because lip service would just be if he mildly states it. But if he stresses a little bit more, and I think it would be legitimate with the concerns for global growth. Now, like I said, if it was 3 months ago, it'd be like, oh, it doesn't really matter because it's still early on. But where we are now, and we're starting to see things accelerate to the slow side, if you want to call it that. And so the more he mentions that, and I think they may press him on that. And look what's happened with the sterling, and the way that now with PM Johnson, he's really pushing it hard. We could really start to slide. That's going to cause a concern. I mean, and it's just feeding on itself. So the more he leans to that, I think that the market is thinking, once again, if we get the 25 basis point, you can really buy the dollar if you're buying the dollar straight out and really run that play to trigger those stops above 1237. If you want to, I mean, getting even confused here with with it 98.37 to gun those stops. I think we will take those stops out. It's going to be a knee-jerk reaction, and I think that the next level is 98.72. And then once we get up close to there, it's going to be the key is what do we do now? And I think once again, I think it's going to be harder for us to go on and move higher, even though the dollar's positioned at a very good opportunity to go on and move higher, and I think it can move higher. I think the trick is going to be is that if Powell stays vague enough, and I'm not sure that he is going to stay vague enough because I think you have to allow for that to happen if they need to do additional cuts, and the market's going to be looking at it, the concern about if they don't do it. So I think the market's may look, and even if it runs up there, is they're going to have to almost want assurances from Powell that he's not looking for additional rate cuts. It's almost like a one and done. And I think if you don't get that, the dollar will disappoint. I'm not saying the dollar's going to come off like gangbusters, but I think that would disappoint. And don't forget, the key is if we get above 98.37, because if we do, you'll have knocked some people out of the box. You may have triggered some longs. And then, so if we get disappointed and we slide back below 97, that's going to open the door for some of those folks that got popped in to come to get knocked out as of the new long positions, and for shorts to say, "Oh heck yeah, this isn't going any higher," and for them to turn around, and then you may see that push much slower. Okay, just want to go on and make that clear on the euro. We're going to go and keep this for 1079. We do know about that 1052. We already hear. I think that 1079 is going to be a pretty good little fall. Can we stretch below that to 1052? Yeah, I think so. That's still 70 pips away. So yeah, we're going to just keep this 1079 as it stands here. With cable, let's go and move into cable. Really, I think even though we're looking at the levels, it's really going to be important to focus on the extracurriculars I'm thinking about is really that the market will tell you where it wants to go, and those levels thinking about that are going to be road markers along the way. So the key is going to be his comments and how this pressure goes. We'll see some comments coming out of the text, but that's what's going to go on and drive this. And then the rest is, Blake made a good point yesterday. He said, I'm not really coming in. I'm, long or short. I'm going to go with either way. And once again, the text and the comments afterward are going to dictate what's going to happen with the dollar. And with that, hey, if he's not all that, if he's not vague, or he's, if he's vague and he focuses more about the strength of the U.S. economy and it's just positions it as a one and done, hey, yeah, we're going to once we take out 98.72, we're going to make a pit stop at 99.18 before we move on up to par. That's what I'm saying. So I'm not going to, like I said, the market will tell you as we come out of this text, and you'll see that he'll be leaning, and believe me, the market will make its move, and you don't have to worry about joining it. That move will continue if it does. Well, here's the cable still pushing lower. Yes, we came up with, and we had a level at 2106. We're going to go and keep that level at 2106. Doesn't mean that this market can't push even lower. It may even break into the 20s. I'll tell you what, let's go with 2106 in case the dollar does push a little bit lower. I think we'll take out that 2106, and let's go with 2065 right there, just for the market to take out those lows. But once again, let's see what happens there. On the upside, we had 2197. Let's take a look here. Yeah, I'll go with that 2197 here. And basically that 2197 would work as a trigger. And once again, that's only if, let's say that, the market feels as if, and I'm not going to say that Powell's going to be laying the groundwork for additional rate cuts, but my point is he would be late. He would actually open the door. He'd be opening the door for the possibility for additional rate cuts. And the market is going to be shoot first, ask questions later. So it doesn't mean like he's going to be open the door for a series of cuts, but I mean, he's not going to be laying the groundwork for a series of cuts, but all he has to do is open the door for the possibility for those additional cuts with the focus on global growth and the impact to the U.S. economy. And if he does that, the market, I believe, is going to be shoot first, ask questions later, meaning that we end up paring back. Let's go move into the Australian dollar. And hate to spend so much time on this, folks. I mean, look what time we're at right now. We'll probably run late on the webinar. Look what time we're at right now, and we haven't even got to the Australian dollar. But my concern, not my concern, I really want to impart, I should say, is that's the way I believe we're going to look at it. It's not going to be about the levels so much. I think the levels are just going to be mile markers because it's the context of that text and his comments that are going to decide where we go. So basically, it's like you're taking a trip. You're taking a trip to, down the road, and these resistance levels are just going to be mile markers along the way. So I think it's more important that we lay the case of what we think is, or what we should be focusing in on to give us the directions for those next moves. The levels, those mile markers on the road, they'll take care of themselves. But we're laying it there anyway. So on support here on the Aussie dollar, it's going to be, if we were to take that dip, is going to be to 68.52. Now we'll get just to the levels now that we've laid the groundwork, and I've spent a lot of time blabbing, but I hope that was helpful. At least that's my take. I'm not saying that I know what's going to happen, but I think that's what the market's going to ultimately end up focusing on. The 69.31, well, if we do make a run up in here, hang on. If we make a bold run back, then it would be 69.44, obviously a big level. Now, once again, if the dollar were to disappoint, we got this Aussie going. With the Aussie, it's a little bit tricky because if the Fed does open the door, it really opens the door for this Aussie to really get the jets going. But once again, these are just going to be the levels that we're looking at here for right now. Let's go move into the Kiwi. So the Kiwi, boy, they got that business confidence index, and that really knocked the market for a loop. And I remember yesterday I was looking at the Euro Kiwi. Remember, I was like, boy, this 38% looks pretty good. I really like it. And I almost took the trade myself. And I came very close. I was like, no, I won't. I mean, I just decided, no, and I'm glad I didn't, because boy, that Euro Kiwi really kept going and going and going like the Energizer Bunny. But anyway, that being said, looking for support down here, if we take an extra little dip, would be 65.75. I've tried to keep my powder dry going into this. I think it's a huge event, an absolute straight up huge event, like the event of the year, to be quite honest with you. Let's see here. Upside is going to be 66.32. Oh, wait a minute, hold on. Yeah, 66.61, okay. Let's go move into the dollar CAD. Upside is going to be 32 cents. This one's fairly easy. We've already had 32 cents, remember? And downside, I put 31.36. We'll open the door a little bit lower. We're going to go back to remember the level that we'd been looking at before. We said where bids would come in. We'll go with the 31.20. Once again, just widening these a bit, going to FOMC. Looking here with the peso, well, to me, it just seems like dead money. I know people keep talking about that long-term trend line, but I mean, they're defending it to a certain extent. They are defending it, but we're not doing anything with it. Obviously, we'll probably get some kind of movement just past it. So I don't see any moves. All the difference is I will go and give it here. Let's move this back down to 1892 to allow for that range here. And I want to stay with this. Well, the 1909 that has kept this market in check. But once again, where will we pop on this thing? It would be right there. We would start to trigger 1911.5. Let's go move into the Dalian. Well, we were looking for the Dalian to move higher a couple of days ago. It did go, we had I'd spoken with Dale, and we had our bias chart resistance. I'd like to look for this move, potentially get up to the pivot. I had my bias chart resistance, remember that time at 891. We got up to 895. We actually came around, danced right, and went right back to that thing again. But we pared back. But we're starting to see some weakness across the board on some of these markets. If you saw here, let's touch on this real quick. Look at this. Europe stock index, stock 600 recorded its worst day since May with a 1.5% sell-off. So you can see where the yen is getting that safe haven value there. So, I'm still going to keep this 927 because what if we hit those stops, and people may not get in the way of this thing, but I think this 927, if you do get up there, I think it gives a very good shorting opportunity, because I think your risk would be limited, because if the Fed isn't so vague, and it really, if the Fed is more vague, or Powell's more vague, then the market will keep on marching up. It can continue to move higher, but this will probably, we may get into a situation where, that's going to be a pretty good stretch. But I'm saying if we do make that run towards 98.37 and we take out those stops, that will allow, I think people won't get in the way of this Dalian, but I think it'll be a very short ride. I think we can start to turn lower. So I think this is one of the better trades to set up on here. But we're going to keep the 927 as our little stretch area here. This bias pivot has worked out well for the last couple of days. Downside. Let's go right there with 817. Look at this thing. You see, folks? It's I was having that talk with Bishman and the Asian session. We're just a spit away from 98.37. So like I said, you get that ding 25 basis point cut, print. They're gonna go for those stops, and they're not very far to go. So we should be able to just take those out without any trouble whatsoever. And then it's 98.71 on the upside that I'm looking at right here. Here we go. See that 98.71. And then if we do get past there, I think we'll take a pit stop around, I think, 99.18. Yeah. Yeah, 99.18 on the way probably to par. But I'm saying is that I think we'll trip those stops on the knee-jerk reaction, and then you're looking at 98.71. So let's go right here. On the downside, well, the key is going to be where I think you'll have to focus on the downside and how we're going to view that. Is 97.52. Um, See, my thought is, let's say we get up there and then we break, we start, you stop a lot of people, or let's say you stop some people into long positions, they get as long as if we take out the 98.37, which I think is going to be fairly easy to do if you see that 25 basis point print. And I'm, like I said, I expect a knee jerk reaction. 25 basis point, ding, by, we hit the 37, 98.37, we take out those stops, and then we make that run towards 98.71. And then if we start to falter because Powell starts to not lay the case, which I don't think he's going to do, but open the door for the possibility of future cuts, which I think that is within reason. Not that I believe or whatever. It's just that he has to do that because you don't want to be vague and then turn around and have to cut because things are really starting to slow down globally, and we may start to see that impact, and that's our concern with inflation. Now, unfortunately, the Fed has a lot of more room to maneuver after its rate hikes. So, if we do go in and see that, where's the trigger that gets this market starting to goose? So, if you got long, let's say you got long, you said, "Man, I know we're going higher. There's no big news to me," and you get long. At 98.37, 98.44, whatever, you think we're going to the moon. And now the market starts disappointing because then Powell starts opening that door. This is the way to look at it, put yourself in someone else's shoes. Where do you look to get out then? And where would the market then look to pick up momentum? And so we'll go with 97.64, 97.64. And like I said, to me today, these technical levels are, basically they're mile markers because with a situation like that, I think it's going to lay the direction for the case for the dollar and some of these pairs to be moving over the course of the next couple of months. I'm not saying it's one straight move. I think the dollar could end up pairing back and then be like a reset, and then we'll start to kind of bob around. But like we've been doing, bounce around, bob around, not doing a whole lot. But once again, like I said, I think that that's what we should be focusing on because the levels, don't worry, folks, they're going to take care of themselves. There's just going to be mile markers on the road, whether it's to the upside or the downside, depending on how we come with Powell. Let's go and move into the cross rates. Well, here we are. You can see that 71.45 staring us in the face. We came almost down to it. There it is right there. Well, really close, 48. So we're going to go 71.45 here on the Kiwi. Upside, we've had 72 cents. We're going to move it right there. 72.15. Well, this thing was bullish and has gone below 72 cents. It's really more of a range now. Let's go with the euro yen. This is going to be the trigger right there. And we're going to go with that, which is going to be this 21.37. We'll call it 21.38. And there's a support level 2074. We're going to keep this rather simple. Still is. Let's go with the euro on. Made it up to the 61%. Look at that. Finally saw a pair back. As we got that news in the Asian session. Resistance is going to be right there at 62.31, but I think it's safe right now. I don't think we're going to see that now because we've had quite the mercurial run. So let's go 62.31. It's the downside that I think is going to be the most concerning here. Let's go move into the 2-hour chart. $61.23, and I'll tell you why I'm pushing it that far lower. You can make the case that no, it's like 61.40. If the Fed opens that door, I think they could send the Aussie, really scooting a lot higher. We'll go right there with 61.25. They're 26, close enough. And let's go with the Euro Kiwi. Well, that looks like a nice little gravestone doji after a nice run-up. Of course, the day's not over yet. We will make the resistance right here. You see that there? 69.07. Wow, what a move. Holy smokes. I'm glad I didn't tangle with this cat. Well, this is where we were yesterday. And for support, we'll go back to 68.26. It's quite a ways lower, but once again, if things turn around, if the Fed were to, if you want to call it disappointed, whatever, lose the door open, then this is where I think that we would go to eventually. Maybe not today, but would go to. So let's move that down here. Let's go move into the Aussie. Right there, 74.55. It's actually 74.57. Let's go 74.57. And on the upside, $74. Let's get just a bit higher right there. Sheesh, thing as quiet as can be. I think we would be able to blow through if they came to. So the first real resistance is going to come right. Let's go with 75.20. There we go. And let's go with the guppy. Look at this. Well, it certainly looks like we're going down here. There is some additional support coming in at 31.86. See right there. But the problem is that I think the yen will strengthen in time. I'm hoping that the dollar yen will actually rally because I think it's going to provide one heck of a shorting opportunity. And look for that, because if we do get that 25 basis point cut, once again, I expect a knee-jerk reaction that could send the dollar yen. You know, I just think it's going to be. We already saw the stock 600 index come off 1.5%, so it's probably going to have a tough time to rally. And so maybe the best we will get is closer toward that 891. You could take it in staggered moves, 891 and then 927. But that'd be great if we can get that. But we're looking here with the guppy. That's I think that's going to continue to weaken. For right now, we've got this 31.75, but I think that this one just looks like it's just going to drop again. I hate to pull it that far away, but I think that that's where we're going. And right now, we're at support here. Let's just provide this little minor pit stop right there, which is there's some volume there at 31.39. We'll just mark that off there. At 31.63. We'll keep this here for this now. 31.63, upside 32.46. Let's go with sterling odd. Well, we did come down to the 78%. We know sterling loves the 78%, whether it's to the upside or to the downside. And it also was confluence with this level, so just perfect confluence there. But I think that we can see, if we do see that, I think there's a potential for the Aussie to rebound. Well, for right now, let's go with this. This is going to work like a trigger, which is a 75.66. Oh, we already had it there. Great. On the upside, I really don't see much of an upside, but let's call it 76.70. And there's the bias chart as we get ready for FOMC day. Good luck to all. We'll get this posted in the chat room. And thanks for joining us here.